Good morning. How is everybody today?
Good
Good
morning.
morning.
Good morning.
Good morning.
Morning.
Whew,
Rainy day here in Florida, at
nice
least
and
for the
sunny
next
here.
hour.
We had storms last night, but nice today.
Yeah, nice.
Yeah, about a quarter
Right.
inch of rain.
Wow.
I'll send it down your way, I guess.
Hot in Chicago.
Yeah. Well, it should be. It's summer.
I've been waiting for that.
Yeah, it's better than the alternative.
All right.
All right. Let's see what we
So
got.
get rolling.
Yeah, let's get rolling here. Yeah. Let me come up here. Okay. Well, yesterday we closed kind of mixed to down. The Dow is way down. The administration came out and said the ceasefire is off and they're fighting back and forth and all that. And then today, um, where's my pre-market? So today we're up and chip stocks are back. So we're seeing it bouncing back and forth like the ping pong table, and Dow's down just a little bit. And you know what? Why now? And I told you this yesterday. Here's so I said yesterday. Remember, Trump had come out and say we're buddies again. Well, Trump says Iran called to make a deal after U.S. strikes. Adds if unclear if the war is back. So, you know, there we got that going for us today. Um, we also have PepsiCo came out with their earnings. Missed estimates as North American consumers tighten their budgets. Okay, we sometimes we get hooked up in all the what's going on in AI, and we don't look at the rest of the world here and you know see what's actually happening. We talk about it all the time how consumers are in the highest debt they've ever been. Uh, uh, Repossessions on automobiles and living paycheck to paycheck and all that, and that shows up also in earnings reports. You know, outside of Micron and Hynix and all these, but we even saw you know Samsung came out and the stock price went down. Other thing that's out there, and again, this goes right along with what we talked about for the last 2 months. Is here's Meta is going to put their AI chip into production in September as it looks to double computing capacity. And as you go down into, and this was just this morning, so it's code name Iris. They went through testing. Uh, it's tailored for a chip for its own needs and working with Broad.com. We talked about that yesterday. That was part of the reason semiconductors are up yesterday. Broadcom and Meta deal. Uh, Also, the bug testing was complete. Adapting the latest GPU at a firm as large as Meta has been a heavy lift. Meta unveiled Iris in its technical name in March with three other AI processors. Plans to launch the chip about every 6 months. Okay. And you keep coming down here. The firm expects to spend as much 145 billion AI infrastructure this year. Significant portion of that, more than 700 billion projected. And again, why are they doing this? They're doing it to cut down really the cost that they're paying to NVIDIA. And we talked about NVIDIA costs. We talked about even in memory chips because they get 85% margins now. They're kind of raping over these hyperscalers, and you know your cell phones are going up and other things are going up. Also, that they're actually investing in building their own chips. Also, so keep that in the back of your mind as we continue to go through this whole AI cycle. Crypto up 62.7 on Bitcoin, 1742 on Ethereum. Gold's up, silver's up. Interesting. Oil is up a little bit, and bonds are up. Well, right, it's equal. Oh, they're up just a little bit, 4.57, so almost 4.6% on the 10 years. So interesting to see all that up. The Asian markets kind of mixed also here. So let's go take a look at what else we got going on here. Let me come over here. Let me move this up here. Um, Again, stocks were down yesterday. We had the conflict in Iran back, and now all of a sudden we're buddies again, and the Iranians have called. I don't know who calls from Iran. I don't know if it's the guys that are shooting at all the ships that are calling, or it's the guy hiding in the mountain that's calling, but somebody's calling. And every time we get the market down, the administration comes out with a something going on. So anyway, that makes it go back up. So again, technology yesterday was supported by gains in Broadcom. after the company signed a deal worth more than $30 billion to develop and supply chips for Apple, helping underpin the NASDAQ despite broader market weakness. So Apple's out looking for chips. They're also looking to see if they can buy chips from China. We talked about Samsung. I put out a report on Samsung, and their stock price went down, and also talked about Samsung phones. Okay, and this could be the first time that they don't make any money in their phones, because a majority of the cost now in chips is causing the price to rise in the phones and how they manufacture it. So again, you'll see some inflation head through the consumers in some of these electronic products. We saw it in Xbox, we saw it in Apple, and now we're seeing it in Samsung. So again, the primary driver yesterday was the Middle East tensions. And also that pushed crude oil prices higher. And we saw that, in the XLE. The XLE was the top performing sector yesterday, followed by the semiconductors and XLK. So there were only 3 out of the 11 sectors yesterday were actually up. We look at advancers, only 31% yesterday, 66.5 decliners. Below the 50-day moving average, we're now up at 49.7. We were at 46 the other day, and below the 200, 49.5. So we're moving back to that 50% level on the market. So the market breadth is still not back to where we want it. I wouldn't call it a booming economy or a booming stock market, because not everyone's really participating. We can look at the heat maps and see the money move back and forth, but it's really not doing all that much. So I want to focus a little more on, I put out a report this morning on what Microsoft is doing. And I think you need to be aware of what they're doing and how this affects the entire AI structure and data center builds and the supply chains and all this. We need all this these chips and this memory now, because we have such a huge demand for AI, and AI is going to save the world. And I believe in AI, and I believe it's a great technology. I just believe that the track that we're on right now, you need to look around and see what's happening in the industries and where the money's flowing. So Bloomberg put out a little red story this week, and I believe that confirms what a series on the AI industry has been identifying over the past several weeks. Frontier compute requirements demanding maximum compute power, okay, like you get in the data centers and through NVIDIA chips, is most likely overbuilt, and enterprise customers and hyperscalers are finding cheaper and better ways to provide this compute to their customers. And this is what I've shown in several of these reports of what's happening. And this was confirmed yesterday with what the CEO of Microsoft AI said. He said we pay a lot of money to Anthropic, so our goal is to reduce and ultimately eliminate that cost to Anthropic. Okay, so take a moment, absorb that statement. Microsoft has invested $5 billion in Anthropic. Anthropic models run inside Microsoft's Copilot products, used by over 400 million people. Microsoft and Anthropic have published strategic partnerships, and Microsoft's AI chief is on record publicly saying the explicit goal is to eliminate the money flowing from Microsoft to Anthropic. So while Microsoft is not ending its partnership with OpenAI or Anthropic, it's changing how these models are used. Instead of depending on a single AI provider, the company is turning Copilot and Azure AI into multi-model platforms that can select the most suitable model for each task. So selecting the most suitable model for each task is the polite corporate language for, we're going to use MAI, which is their own internal AI system, when it's cheap enough, and we'll use OpenAI when we have to. Use Anthropic as little as possible. Anthropic, which is preparing to IPO and needs to demonstrate durable growing revenue from enterprise deployments, is losing its position inside the world's most widely deployed enterprise AI application before its S1 is even filed. And we're talking about the Microsoft series of product suites. The Anthropic IPO pricing problem becomes acute. What is Anthropic's worth if the largest enterprise distribution partner, which is Microsoft, has publicly stated its goal to eliminate payments to Anthropic? This is not a negotiating tactic. Microsoft doesn't need to negotiate through Bloomberg. It can renegotiate contracts privately. This is a genuine statement of strategic direction made at a developer conference, quoted in the financial press, and confirmed by operational reporting at Bloomberg. What this means for AI is game changing, I believe. This is the model tax story, and it rhymes exactly with the chip tax story Microsoft already solved. Microsoft built Maja 200 to escape NVIDIA's GPU pricing. They made their own GPU. Microsoft built MAI to escape OpenAI's and Anthropic model pricing. This strategy is identical. When a supplier charges too much, build your own and eliminate the tax, which is what they're doing, is what you're seeing Meta doing, what you're seeing Amazon do. The chip tax escape. So Maya 2000 or 200 handling a significant share of ChatGPT inference workloads was documented in my report on the hyperscaler squeeze play. The model tax escape, the MII handling Excel and Outlook queries, is confirmed today. Both moves reduce Microsoft's cost of revenue. Both moves reduce revenue for a supplier being displaced. Both moves confirm that the thesis this series is built across 16 reports. The hyperscalers are systematically working to own their own supply chain rather than rent it. Tens of thousands of AI prompts in widely used spreadsheets and email applications. Okay, things we do every day. You know, we talk, Trent and I use it, you guys use it, Kerry uses it. Okay. A lot of those are now being completed each week from Microsoft internally with their internally built MAI models. This is key. This is the key architectural decision. Microsoft is not replacing frontier models for the hardest tasks. It's replacing them for the easiest, high volume tasks, exactly what part 8 of our reports predicted when we documented the open source AI migration pattern. Routine email summarization, basic spreadsheet analysis, simple question answering, the tasks that generate the vast majority of token volume, but require only commodity level AI capability, are now running on MAI. Frontier models, such as Anthropic's and OpenAI, are being reserved for genuine complex reasoning tasks. So instead of routing everything to the big data center and running through the NVIDIA chips, you know, to answer a question and plan my vacation to South Carolina, only the ones that are like when Trent says I would need a program made to decide which stocks in this sector are going to do the best and which ones aren't, and that kind of situation, those would go more towards the Anthropic and the OpenAI. So this is not a marginal change. Excel and Outlook together represent more than 400 million active users. Even if MAI, the Microsoft system, platform, is handling only 10% of their AI queries today, tens of thousands of prompts per week will scale to tens of millions as the rollout continues. Every prompt that runs on MAI is a prompt that doesn't run on OpenAI or Anthropic. Every prompt on MAI is revenue. OpenAI and Anthropic does not collect. The reason is stated explicitly in the first clause: cost reduction, not capability improvement, not product differentiation, not strategic independence as a philosophical goal. Cost, the bills were too high at Microsoft, and we were talked about that, how the CFOs were now asking, where's our return? So the company that controls the distribution pipe, and that's Microsoft and Amazon and the hyperscalers, for OpenAI and Anthropic's enterprise revenue, is cutting that revenue to reduce its own cost. The investment relationship and the commercial relationship are now explicitly in tension. Microsoft invests in Anthropic as a hedge on AI capabilities. Microsoft is simultaneously working to make Anthropic's commercial revenue from Microsoft products disappear. Both things are true simultaneously. This is not an inconsistency. It is the hyperscaler playbook applied to AI models exactly the way it was applied to GPU chips, cloud infrastructure, and every other input the hyperscalers have historically decided was too expensive to keep running. First, they use it, then they understand it deeply through usage, then they build a cheaper version, then they use the cheaper version to eliminate the external cost, then they sell excess to the cheaper version to generate new revenue. So if you look at chips, you had NVIDIA, and then Microsoft came up with Maya 200, Amazon came up with Trainium, Google came up with TPU, and Meta came up with MTIA. That's in chips. So they're going to invest in chips on their own. They're still using NVIDIA, but they're moving forward to getting on their own system. Models was OpenAI and Anthropic. Microsoft came up with MAI. Amazon came up with Nova. Google came up with Gemini. Meta's up with Llama. And then when you look at compute, you have CoreWeave. Well, now Meta Compute is there and it's going to compete with CoreWeave for selling out compute. And you're going to see other companies do the same thing. The pattern is complete. Each layer of the AI stack that Microsoft, Amazon, Google, and Meta were renting from external providers is now being built internally. The hyperscaler independence movement documented across the series since part 8 is no longer prediction. It's a Bloomberg lead tech story. So 2 months ago when this series began, the question was, what risk is the market not pricing into AI stocks? Today, the answer is no longer theoretical. It's a Bloomberg story. It's an internal document from Atlassian, Citi, and Adobe. It's Blackstone selling data centers. It's Samsung's record earnings producing a 9.6% stock decline. Its token index 20% below its peak. It's Microsoft AI executives on record saying his goal is to eliminate payments to Anthropic. The Frontier Labs won't lose the headline partnership agreements, they'll lose the volume. That sentence is the most precise summary of the entire AI trade's current risk that anyone has produced. The press release will keep saying valued partnerships, the contracts will keep being renewed, the equity stakes will be held up, and the actual revenue, the token volume, the API calls, the money flowing from Microsoft products to OpenAI and Anthropic servers will keep migrating to MAI, to open source models, to custom silicon, to internal infrastructure. The partnership will survive, the pricing power behind them will not. That is what this series has been documenting for 16 reports. That is what Microsoft just confirmed in a 6-sentence Bloomberg story that NBC gave 45 seconds of airtime. This information gives you a much more comprehensive understanding of the AI trade in a very fast-moving industry. So where else can you find this kind of research within our retail environment? And that's precisely the part you probably won't hear on CNBC. So for more details, I encourage you to read my latest research report. It's called Microsoft Just Said the Quiet Part Out Loud. Again, AI is not going away, but the way it's delivered and paid for is changing every day. And it looks like NVIDIA, OpenAI, and Anthropic are in the crosshairs of these hyperscalers as pressure to reduce compute costs are being discussed and implemented across hyperscaler and enterprise boardrooms. So again, we're looking at not everything is going to go through the big data center. Not everything is going to go through NVIDIA chips. They're going to be able to carve out the majority of it, which is just answering questions, and put it in a simple, less costly system, and then send the rest over to Anthropic or OpenAI, which is going to drastically reduce the amount of money they have to pay those for the solutions and the answers that they get back. And they're going to keep it internally now instead. We're seeing that all over now, and it's a big part of what's going on in AI. I just think it's something you need to be aware of when you think about AI and the excitement that we have about it and how it's going to change the future. So that's what I got, Trent. You got anything else to opine on?
I think it's interesting that all of a sudden the big hyperscalers are now bringing it in-house. Um, it's typical of how they do things. Let the first guy go through the door, let him get his head chopped off, and then we'll go figure out what mistakes they made and how to do it better and demand for it. And that's what you're seeing the hyperscalers doing. Microsoft, Google, they have the money, they have the diversified income to do it versus an Anthropic or OpenAI are 100% dependent on you paying a subscription fee. And I think one of the points you've made there and that Microsoft recognizes is that the tasks we're asking AI to do, probably 98% of those tasks are low level,
Low cost.
low cost. I don't need a Blackwell or a Rubin chip to do it. I need your first generation chip, and it will probably take care of probably at least 60 to 70% of all the needs that people use AI for. Which then you figure that out. The only way you figure that out is you allow somebody to go and make them to go through the front door before you. And Microsoft and Google are smart enough, been in the game long enough to know that they can watch these guys get overly exuberant about what they're doing and have all this money flow into it and recognize their mistakes and what they're doing great at and what they're doing bad at, adjust, and then they have the capital to go out and build it themselves and take all that business away. And that's where I look at the implosion of OpenAI and Anthropic in the coming, probably year. I would be surprised if OpenAI and Anthropic's IPOs, when they hit, they'll pop like anything, like everything does. And then people will start digging and they'll start reporting, and it will be like, oh, these guys don't have a good business model.
We've already looked at it. Think
Yeah.
about it, Trent. If Anthropic and I mean, they're already not making money, Anthropic and OpenAI. And think about the investments they made in loans to Iran and these other companies or CoreWeave and such. If they
Yeah.
fall down, it's going to be kind of I think it's going to be a domino effect throughout
Right.
that circle vendor system.
Well, and you think about the statistics of the number of data centers proposed in 2025 was 777. 16% of them were in the actual phase of going, getting permitting. Three quarters of that, or excuse me, 33% of that 16% actually broke ground. It comes down to how much compute do we really need to do these tasks? And can we go to from say, a $50 billion facility expense just up front? Can we go to $1 billion facility or $100 million facility that sits down the road from me? That isn't as um, abrasive.
Doesn't have a huge footprint.
Right, doesn't have a huge footprint, but doesn't impact the community as we're seeing with these big data centers. I honestly think it's going to go from complex to simple. And the actions of Meta and them potentially selling off their compute, that kills the neo scalers, I think you called them.
Yep.
You know, the CoreWeave's Nibius, and then you just look at the financing of how these companies have come about. It's like it's a Jenga puzzle, and somebody's about to pull one of the wrong blocks, and you guys see this thing crumble.
Well,
But just go back to the guys who've been doing this over and over and over again, and how successful and how long they've sustained their existence. Those are the guys I think at the end will win this whole game.
and it makes sense. You look at, Google canceled or delayed and quit on their project in Cheyenne. Okay. Uh, they had all the permits, they were moving. And then you see Blackstone selling off 3 data centers, okay, and then getting out of one in Virginia. These
Yeah,
guys know, and we reported on all this. I go out and I look, and what can possibly go wrong? And then you
right.
see how the pricing structure is changing. We've talked
Mm-hmm.
about how the CIOs are saying, hey, where is our, CFOs are saying, where is our return? Okay, we're spending billions and billions of dollars. Where's our return? And then, so now I think the boardrooms are saying the same thing. And the boardrooms are saying, well, look, we're paying all this money out. We've seen our productivity. The enterprise companies are seeing productivity is not going up. In fact, the expenses are going up, and it's actually cheaper to have people do it than AI. And I've got it all documented. You can go read the reports. And now they're changing their tune and say, well, why? And well, it's because not everything that you do through AI has to go through a Rubin or a Blackwell, like you said. And so I just
Right.
put all the pieces together, and it's like AI is not going away. Okay, guys, it's just the way it's going to be priced and the way it's going to be produced uh, is going to be changing from the last 2 years of just build, 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 build into, okay, where's my return? Where should I build to get my return?
I think honestly, in the next 24, 36 months, AI will become more powerful, more a part of our days,
And
day
more
use,
affordable.
but more affordable, but it will become better. Right now it's clunky. Right now it's complicated. But I think because and it's any cycle in any business, any development of any new technology in history, it goes through a hype phase, everybody's in it, and then it's the filtering out phase. And then you figure out, okay, I only need this, this, and this, and now I'll produce 80%, 20% of, was it 80% of my profits coming from 20% of my effort, right? And so that's, I think, the phase we're in. Will it change advertising? Will it change how I book a flight? Yeah, it's going to, but not at the, most likely not at the scale that you think it will. And I think that's where the human factor really comes back into this, that we will see a resurgence in hiring in the coming 36 months. At the
We've
end of
already
36 months, it's starting to happen, but it's
we've
going to
seen it
really
start.
ramp up.
Yep.
It's going to really ramp up because economically we need to get past that downside dip. Once we accelerate, we're going to realize, oh, we have these tools. Now, if I apply these tools to these people, all of a sudden I'm going to skyrocket. And that's, I think, the cycle we're in right now. I also
Yep.
think the one good thing out of all this that I think more and more I think about is that the blue collar worker, the electrician, the plumber, the HVAC, skilled workforce is going to really come back into play. I really think you're going to see a resurgence of those industries, and you're already seeing it, where a guy can come out of high school, go to a 2-year school, and get a master's in plumbing or HVAC or whatever, and go out into the workforce and make 150,000 plus and become a millionaire. And that's the way America was built. And I think we're starting to see signs of reverting back to that. We just got to continue to support that. And our infrastructure in this country, 100% needs it. So I really think a rebuilding of our infrastructure, and AI is pushing us to do that. You're going to see a change in our workforce, and you're going to see a change at the dinner table with the junior in high school of what are you going to do? Are you going to go to a 4-year college where it's a crapshoot of getting a degree, or are you going to go to a 2-year and become a specialist in something?
Yeah,
You know?
I agree. All right.
So,
Well, let's move on.
all right.
anyway, the series that we put out is just to give you an idea that things you're not going to hear. Okay, you don't hear it on CNBC. You don't hear it unless you dig into it and figure it out. So it's there for your benefit, just to your knowledge. You can do with the information what you want. It's fine with me, but I like to dig into things and understand where things are going. And we always talk about where the puck is going to go. And I think we're ahead on this. And Trent and I were talking. He said it's amazing now. You're starting to see YouTube and CNBC come out and start talking about the stuff we were talking about 5 weeks ago. So that makes me feel pretty good. Heat maps. This was last Thursday. I'm just keeping it up so we can see. Everything was out of it was into defensive and out of tech, and then on Monday, went back into tech and out of defensive. It was Monday, and then Tuesday went out of tech and back to defensive, and then here was yesterday. We went out of defensive basically and back into the tech mold here. With the chips and the memory and all that, but everything else was pretty well, except for energy because of the war starting back up. But everything else was pretty much down again. On the heat map, here's how we finished. We already looked at that. Apple's committing 30 billion to Broadcom for just chip making push. We talked about that a little bit. They're looking because they had to raise prices, and that could hurt their sales. If people say, look, I can't afford another $300 for a $1,500, $2,000 cell phone, maybe I'll just hold mine now for a while and see what happens. So they're out actively looking at Apple, not only here but also in China. SpaceX stock closed below its price, 148, 2-day slide after NASDAQ inclusion. So, we talked about what's the effect of getting in the NASDAQ, and the effect, at least right now, is it went back under the price that it opened up on the first day of trading. Meta's building its first big Canadian data center as AI expansion crosses the border. Well, yeah, Meta has talked about last week. They're going to start selling compute. So you sell compute, and they're going to be in that business. They're going to own data centers, and I don't know what the situation up in Canada is. As Zeke said, they have 30 data centers up there. So maybe they're going to sell compute up in the Canadian area. But anyway, yeah, Meta is they're serious about being a provider of compute power. Just like and here's the AI optimized what it's going to look like. So is this what you want in your backyard? As opposed to what Trent was just talking about. Look, if I can do it with Microsoft Excel, it might be in my closet or in a little building down the road, that can handle all that instead of this. Think about the water, think about the electricity. They already have opposition to this. There's concerns of local communities. Report from June, Canadian Broadcasting highlighted environmental issues, emissions, water consumption. So they're going to have that issue also. And they say they'll support over 300 construction workers at its peak. And again, they don't talk about how many people are going to work in the data center because it's not very many. So they always talk about construction workers, but this goes away. Okay, I can see it down at the data center where I'm at right now. S&P 500, we still haven't got above the higher high. We still haven't closed below the lower low. Here's our lowest low. We're just heading sideways. We've gone up, kind of a little of a pennant forming here on SPX. Same on NDX. We could not get above the 50-day moving average on NDX yesterday. Dow Jones was on a trajectory up along this line of resistance. Dropped down yesterday quite a bit because of the war. We'll see where we go today. The equal weight dropped down below its support resistance line also. We saw that in the heat map. Mags dropped down just a little bit, but outside, we were talking about this bear flag kind of a formation. We did drop down below that. We'll see what happens today, just a little below that bear flag. We get down below that 200, definitely confirmed bear flag. NVIDIA had a nice day yesterday, popped up above its shorter term resistance level here. We were up about 3.65%, still way off the highs up here and still trending down, but we got the 50 right above it. We'll see if we can get past that. Google down. Here's that bear flag again, kind of down below. We're seeing the same patterns in these hyperscalers. Here's Amazon, same kind of thing, kind of down below the lower level on a bear flag. Microsoft, same kind of thing happened in Microsoft and Meta. Meta's just, again, kind of all over the place, but at least it found support on the 50 and didn't break down below it. Tesla, again, keeps coming up to this level of resistance and pop back down. Again, we're under the 50 on Tesla. It just doesn't know what it's doing right now or where it's going, but that's Tesla. And Apple's right up on all-time highs. It just came up, hit it again. I mean, if we come back down, it'd almost be a double top pattern, and we'd have to deal with that situation on that. Palantir couldn't quite get past the 50. Still trying on that on the 50 on Palantir. Netflix flattened out a little bit right on. We thought, we had an upward binge for one day, a little gap here, and now we're stalled out. And you can see why we're stalled out. But, look what happened last time. We'll see if we can get a little momentum in here. The oscillators aren't too bad, except for the RSI turned negative a little bit. SpaceX, again, closed at 148 below its 150 opening price. And again, this is a 30-minute chart for a month. XLF had a good day, or XLE, I mean, yesterday because of the war. You can see XLE moving up. You see ExxonMobil. We watched them come down, hit this 200. They got above the 9. The 9 starting to roll back up. We like those patterns. We like the oscillators. Although, we opened up and then we closed back down. It only takes we got on the phone. They called us. We're best friends again, and we're going to end the war and all that. And that's what happened this morning. CVX, same kind of pattern. Oxy Petroleum, same kind of pattern. Valero is a refiner, so they're not, they get their money, they make their money on the crack spread and not really the price of oil per se, and so they've been doing well in the refining business. PSX has some refiners. This is Phillips 66 also. XLK, again, a little bit up yesterday, but just over the 50. So again, we're not back. You can still see we're kind of in this downward pattern on the XLK. We look at the SMH. We did get above the 50 a little bit. We're right on resistance. This is semiconductors. So again, the oscillators still don't look good on these. We look inside. TSM was up about 1%, right on resistance. You look at Broadcom, right on resistance, up about just under 5%. Did bounce off the 200. I like that. ASML, right on resistance. It was up about 1.25%. Lam Research still bouncing on the 50 there a little bit. It was up about 2%. And Micron, again, we've been watching this 50, and it looks like right now they're holding on the 50. If they drop below it, definitely not good, like Intel here. Intel dropped below, tried to come back up, bounced off the lower Bollinger Band. Applied Materials, nice little bump up, but again, here we're on resistance. You're seeing things rolling over. Looking at the oscillators, okay, you have a good day. You're up to just under 3%, but again, you look at your oscillators; they're not there yet. It's telling you no confirmed really move to the upside in a sustained way. ADI, same kind of situation, up just under 2%. Marvell right on the 50, so it held. Skyworks continues down, but looks like we might find some support at about 56 on Skyworks. We'll see if that continues. A lot of times, we're outside the Bollinger Band. Even on the lower side, we'll pull back in. It wouldn't surprise me to come down and see a little bit of consolidation along that line. GEV, Vernova, down a little bit, but right on resistance again. Core weave came back up, hit right on the 9, and you got some sell orders or right above it on the 9. So be careful. We did come down. We hit this level of support, which we've seen before, and we'll see if we can gain some steam here. But I always like to wait for the MACD to cross over. I ran right up to the 9 in a resistance level. It was up 8%, or, yeah, 8% yesterday, but you can see we're just kind of still consolidating sideways here. So it looks good on the daily, 8% up. But when you go back and look at the chart, we really haven't gained all that much when you look at some of these stocks. Nibius, same kind of thing, had a nice day up, almost 11%, right to the 50. It's amazing how, everyone sees the same lines. They use it as support and resistance. And so the algorithms, and that's where you can see them stop. Here's Wolf. Wolf had a nice day, up almost 13%, but still within the downward trend. We just hit the upper level of the downward trend, and we'll see. We've done this before. We've hit it here. We've hit it here. We've hit it here. And again, so it looks good daily, but you go and look at the chart and say, okay, I'm still not convinced that I've turned around yet. The charts don't tell me that. Here's your aerospace and defense. So money, came out of that. We came up, hit resistance. We looked at that yesterday. Here's your XBI. This is your biotech. Biotech's kind of moving over to the side. We'll see if it gets a bounce. You still have the upper Bollinger, but biotech still looking pretty good, flattening out a little in the stochastic. Insurance, still good. I mean, it came back in Bollinger Band. You're still a 9 as the support. Bollinger Band's definitely resistance level 65.27. You'll see some sells. Healthcare, healthcare is doing well. I mean, it went down yesterday 1.3%, but again, still the trend is up. Look at the trend, and it doesn't go up every day, and you have to come in outside that Bollinger Band sometime. We'll see if more goes in today or comes out. Here's your financials. Came up, hit resistance, another candle down, but you're still above the 9 on that. Your oscillators are turning down a little, so watch out. You see the stochastic cross. That usually means you're going to see, not always, but usually the MACD crossover too. Here's XLI, actually crossed down, hit resistance for several days. Now we're fighting the 20. Look at the oscillators come down. This is industrial. So I'm going to stop right there, Trent, and talked a lot about everything. And very good discussion today. I'm going to turn it back over to you. If anyone wants to look at anything, put it in the chat and we'll take a look later.
Okay, we'll take a look at a couple things. I just ran a 1880 quant analyze on SPY. Trend-wise, it's up. We look at the trend. The 200 is positive. The 62 is positive. We're right at the 15 trade trend line. Look to open up right up against 148. Yet the fractal math basically says there is no confirmation of a trend, confirmation the trend is moving higher or lower. It's just basically an indecisive. We're in a neutral zone, basically a what do I do next kind of zone. And I think this is representative of the earnings season that we're entering. Especially next week. And so when I look at the move up against 148 or 748 on SPY, that is your resistance level. And so the options market, that is your bull bear fight line in the sand. So it's buying into it up against this pre-market up against 178 or 148. If you see a break above that, then market makers will above 750, that you'll see them basically neutralize their book, and volatility will continue to be suppressed, and you can float. We could likely float up towards 760, but we got to get past that 748. We got to see a close above that. But basically, the math is not confirming that this is any level of strength on a positive level going higher or going lower. So until that math confirms the trend and confirms the institutional's commitment one way or another directionally, this is basically just noise. The participation rate is low overall. So this is, I think, a time of caution, and not to get, this is going to be great. This is, we're turning, it's going higher, this, that, and the other. Earnings is going to be, I think, a big determiner of this. Couple of stocks that showed up on my scan yesterday. This one, Iron Mountain Incorporated, IRM. It's been on a downturn, but the math came back and said, listen, we've got some of the math, one of the three elements of the math says this is starting to find a bottom, some level of support. Your RSI is below 30 right now. We want to see that increase and get above 50 to show true strength. But right now, the sort of line in the sand is the or the intermediate trend at 123.67. We see a break above that, then we've got more strength will come in and more of the math will start to add up in a positive way. But now, right now, why I bring this up is this is a watch list item, something to put on your list to say, okay, if we can break above that, if I want to speculate, then this is a possible entry point. Don't speculate with all of the house money, but maybe a fraction of it, and then possibly get a ride up to that 123 mark, 123 mark, which was, what is that? It's $8 increase in that would be nice. But that's your resistance level for the trend and the math to add up. We got to get above 123. So that's one of the ones I've got on my watch list to keep an eye on. The other one is Texas Instruments, TXN. This is one that the math is starting to add up. We're seeing a break above the 200 trend wise, above the intermediate trend, and we're going to open above the trade trend at $311. So up $10 this morning pre-market. But we do have a level of resistance here at 320. So that 320, if we can break through that, then we can start to see some clean air up here right around to 320 to 330, 340, 350. And that's where the options market is basically our market makers are putting in support at 270, resistance at 320. But right now, the math is starting to add up in that the trend is being confirmed and that we are starting to see some real positive moves there. Your RSI is sitting at 48. Chances are we'll open up above 50. We want to see that positive RSI above 50 and that climb higher up to 80 on the RSI. That's when chances are we'll get up towards this 330 mark. So there's some potential short-term trade opportunity here for this. It is a big price stock, so at $311 pre-market right now. But we could see this be a darling for a little while. So a nice potential 15 period to under 62 period, definitely trade, in my opinion. Another one is Microchip Technologies Incorporated, MCHP. We're going to see it open here. The math is saying there's level of support here. The trend is positive on the 200, negative on the intermediate, and negative on the trade trend line. We want to see that trade trend line because that's your 15 period. We want to see that turn up. We say it may bounce off this intermediate trend, but we need to see for real positive trend confirmation. We want to see the math confirm this trend. It's basically 1/3 of the way there when it comes to confirmation, but we need to see a break above 90, basically $90.70. We see a break above there and a close above it, then we start to move up maybe towards the 999 mark. And then 107 after that, and then 115. So those are watch list ideas that I have. TXN to me is more of a possible willing to put capital towards it idea, but we do have some resistance level that we need to get through. So these are very short-term periods, 15 days or less in time frame. So keep that in mind. Honestly, I believe we're going to see more of that period of time duration of less than 15 days with a lot of stocks because of earnings coming out, because of the weakness in participation in the market, the questioning of how markets have gotten to where they are, and that is big at CapEx spending and all that. So we're in my opinion, we're in a very short period of time duration wise that I'm looking at putting money to work. Once we see some confirmation of some positive things, that could influence the market, then I would extend that out to a more of a 62-day period. But right now, I don't. I see more short-term opportunity versus long-term opportunity. But I also believe there is a reset in a lot of these companies, and that's why I'm looking elsewhere for other opportunities outside of just the ones we have focused on for the last year. And I think there will be some value opportunities. There are value opportunities out there. We just got to get outside of our box that we've been in for the last year and a half. And I think there's money to be made. We just got to go think differently. So that's the short version of everything that's on my mind right now.
That was a pretty short version for sure.
Yeah.
So thanks. That was awesome.
Yep.
Uh,
Thank you.
couple requests. ONDS chart. Interesting chart. I kind of like these that come down and have the potential for a swing. We've come down. We've hit this level of intermediate support. We hit it on the 25th of June. And then we've had 4 days hitting it. And I like the fact that the nine's coming down, it's kind of flattening. I want to see it roll back up. I want to see these oscillators turn to the positive. We're not quite there yet. As we consolidate, you can see we've come up and we've hit this level of resistance really, and we've had it before. It used to be support, and it was right on the nine. So here we are. We came up, hit the nine, went back to support, nine, nine, nine again. So it's getting smaller and smaller as it's getting crunched in there, and I'd wait for it to come back on the other side of that, and you might get some room to the upside. Watch out for your 20. You have a little resistance here at 836, but something to put on your watch list and take a look at.
That's
Also, go
I think
ahead.
that's one of the drone makers that
Is
really
it
had a
okay?
yeah, had a big beginning of the year, big focus on drone warfare technology, this, that, and the other. From my point of view, you're still below the 200, below the intermediate and trade trend lines. That's still a negative, and you're mathematically there's only one third of that's confirming it, but it could, I hate saying that, but it could, you start to see some positive moves. And like you're pointing out, it's finding a bottom there,
Yeah,
but it's, I think you guys shorten, keep your window short because there is a lot of resistance there.
right. And
Um,
it's a low price stock, $7.52.
yeah,
So
you're not
uh,
going to, I mean, just get, if you bought 100 shares of it and which is a bit of a chunk for some, um, a buck move would be really obtainable. I've got a range today of 729 to 839. So you could get a dollar move out of it. You just made $100 on a hundred, 100 share, owning 100 shares of it. So it could be a
or
nice little short-term trade.
I'd still would wait because we're still not above that nine and we still don't have confirmation yet. I'd put it on the watch list. I do like this that it's found some support here at about
Yeah.
731. So um, would I buy it today? No, not unless I was a gambler or speculator, but
Yeah.
it would have to meet my trading guidelines. So that's why we have processes. Trent has his, Kerry has his, I have
Yeah.
mine, and you guys have your own. So what fits your risk management style? This one is one that interests me, but it's not one that I'm willing to pull a trigger on this chart right now.
Yeah.
Would you agree?
I would agree. I mean, there's resistance. The option market is priced in $8 as a resistance level. So
Yeah,
keep that in mind.
I can see that. Yeah.
Yeah. I think you get past that, you could see some clean air up until probably 950 or so. But yeah, it's the other thing is this is, I would say, a very news driven sector because it is drone technology, it is warfare related. Um, these guys pop when they get contracts, governmental contracts, and that's what ONDS had experienced throughout the first of the year. So um, look for those news pops, but they are right now heavily fueled by a contract agreement, that will fuel this stock to go higher. And I think that is also a very short-lived event, as we have been seeing for the last year. Is a news story can move a stock and it can move it up or it can move it down.
Okay, I agree.
Yeah.
We had EOSE, Energy Company and Energy Enterprises. kind of like what we just looked at on the last chart. Here we've come down, we've hit this level of support, and here we are again. Now the nine, it's still downward trend, and we've hit it twice. Uh, Bollinger is still heading down. Your oscillators are still negative. Okay, so you use the oscillators as confirmation, and the confirmation isn't that we've turned around on this, but the fact that we've hit a pretty good level of support. Again, I would want to see that nine come down and spin back up. Again, this is a $4.50 stock, and upper resistance is a 653, but the trend is still down. So I would put it on the list to watch. Would I buy it today? No, that wouldn't fit my trading guidelines, but that's me. Trent, got anything on that?
Similar to ONDS, similar makeup,
Yeah,
watch
I think
list
you're.
item. Yeah,
Yeah.
I agree with you.
Okay. Hold on, I'm writing down some of these. CBRS. Okay. Okay. Hold on. You guys have a lot of things to look at today. Okay. So the next one up is XZO. Is this one of Kerry stocks?
Yes,
Zio
yeah.
Group. Okay. Again, 1750 on the price. Are making some money here. Looking at the earnings. Uh,
There-
nice shot up. Came back within the Bollinger Band. Came back down. Again, you look and you see kind of a crossover on this on the stochastic here. Still, it's embedded. You could come back down if I mean the support right now is at the nine. Doesn't mean it can't blow through that. But a lot of people would put maybe a buy in a little bit below if it came down and see if you can catch it back up. We've seen these patterns where it goes up sideways, nine pushes it back up on this. I don't know exactly what they do. Kerry does for sure. He probably has a report out on it. The only thing that I don't like is it's only at 250,000 in volume, 297,000. This doesn't have much volume. So that would eliminate it from me because I need volume to trade on it because otherwise you have large spreads between your bid and ask, and you might get caught where you can't get out of it or get into it at the price you want. These are extremely low volumes here. Trent?
I've got basically it doesn't have a 200-day moving average because it's pretty brand new. But it is above my 15 and 62. The daily trading range is between 1620 and 1824. So that move down could, if you got down towards 1620, could be a nice entry point, which would put you close to your 20-day, if I'm looking at that right.
Looks
Um,
like it. Yeah,
yeah,
15.
which I think is your purple line is your buyers. So up right in that range.
Yeah.
Um, Two of the three math confirmations do give it a positive. So um, so it is ideal, but I would just look at getting a better price. So trend wise, there is effort there, there is support there based on the math, but I think you could get better for a better price tag for it. So something to keep a eye on. If you could pick it up down around 1620 or so right today, or
Yeah.
in the next couple of days, it could be an opportunity for a nice bounce and swing higher.
Next is
NBIS.
Nibius. Nibius came back up and found resistance on the 50. The 50 is a kind of level of support and resistance in the history of this stock, and now we're on the bottom side. So a lot of times I tell you about in technical analysis, you'll go down, it'll come back up and retest. If it can break above it, that's usually positive. But the fact that it hit the 50 and stopped there, well, I'm going to watch it today and see if it ends up just being a false, just a back test of it, and then it continues down. The oscillators don't look very good at this point. And again, you're below the 50, the 9, the 20 are coming down. Your trend is down. Okay. So I would wait on this one. Definitely.
Yeah.
Again, yeah,
You're
and
at the
again,
bottom.
there's a lot of stuff going on with Nibius and CoreWeave and all that behind the scenes and how they're financed and things. So,
Yeah, I would agree. I mean, basically the math is it's weak to indecisive at this point.
yep,
So there's
yep,
really not a lot of confirmation taking just what's going on with this sector
yep,
or subsector. A lot of questions there for sure.
yep. And
So,
again, you got a lot of lower highs and lower lows on this one, and it just hasn't turned the page yet. ANET. Oh, look at this one. ANET.
There you go.
Where is my, I want to see. All right, well, you've got looks like it's come up at least the recent highs. I'll have to go back a year, see if we, Arista Networks. Yeah, we're right up on where the highs are, and we broke through it a little bit on that. Let's go back to year to date. Get a little closer. It's above the 200, above the 50, above the 9. It's outside the Bollinger Band. Uh, Come down, you got a little bit confirmation. Your MACD did cross over. Also, your stochastic, you got a pretty good RSI because of this big candle. Your support is the 9. Your resistance is really where it's at right now, the upper Bollinger Band. So again, this could be a momentum play. I don't have
It's
that
gonna
confirmed yet that it's momentum, but it's got good volume on it. And the trend, if you look at the trend, and it's easy to do, is kind of, you can see where the bottoms are, and it's up. So
it's
again,
gonna
go ahead, Trent.
it's gonna open up at 185.15, so it's breaking above some resistance levels there.
Yeah, because your main
200.
one, yeah, your main one is right here at
Yeah.
about 179, and it
Is
broke
there,
through that. So again, it's outside the Bollinger Band. I don't like buying outside the Bollinger Band. I'd rather buy within it. That's just me, my trading plan. Some people like to uh, live on the wild side a little more and run that Bollinger Band up. We've seen plenty of times that it was. I think there's a software play. You're starting to see software plays come back a little bit. Um, what was it? The IGV. We'll take a look at that. Oh, okay, this is their software. That's expanded tech. IVG. Maybe it's IVG. IVG. Nope, I forget what the software one is, but anyway. What else we got? RELY. Jeez, RELY. Right up on resistance. Okay, back to support at the 9. We got to get past this resistance level, which we've tried. You see these topping tails here telling us, it's trying to move up and keep coming back down. We came up, we didn't quite get back to where we wanted to hit, and then came back down. We'll see if the oscillators continue down. But again, some people might say, I'm going to buy on the support level. I see this line. That's usually when I get out. So if I was trading this, that's where I'd get out, and that's right up what you're up against. Doesn't mean it can't climb higher, but I follow my trading plan on that. So you're on the upper side of this rather than the lower side. CBRS. You have anything on that one, Trent, before I move on?
I think a better price tag around 22. It's up
Okay,
against it basically it's not confirmed.
yeah,
It's an indecisive kind of situation.
I agree. CBRS. Cerberus Systems. Let me go move this out a little bit. See if I can see anything. Right now, it's opening up. It's still lower than your 9. You got to get above that 9. You got resistance, pretty good level of resistance at 215. You're at 187. You're under the 9. You're under the 20. Your oscillators are just flat. Again, kind of consolidating sideways here. Right now, I would need more momentum on this one. Trent?
I don't have anything on it.
Okay.
It's
Okay.
too young. It's less than 30, 60 bars
Yeah.
right now.
Yeah, it's hard. Okay. AKAM. Oof. Okay. Go. This chart's busy. Oh, there we go. Nice turnaround on this one. I'm gonna move and see where the sell orders are on this one. I'm gonna put it above tight. Let's see. Okay, it's right above the where we are. So your next level resistance on the upside is basically the 50. Okay, where you see a resistance level here. So you're above, had a nice move 2 days ago. Here we are moving up again. So you got up to about 132.99, where you'll find some resistance, and support should be at the 20. All right,
Um,
what else we got? C Citigroup. Uh, I would kind of wait on this one. This one is kind of, you could have a bullfight pattern. You can see the pull here, and then we've kind of gone down this way. If we break out of that upper side and you just draw a line, then you have a bull flag. But it would be breaking through resistance at 143.89 until it did that and gets up to this level and surpasses where our high was. That would give you a green light for me to say go ahead. But right now, you've got all the oscillators telling you no. You've got a downward trend, but potentially this is a bull flag. Trent,
Yeah,
anything?
so I've got a 137 23 as the bottom end of the range and 144.23 as the top end. Two of the three mathematicals approve it, so there is strength there and it's trending. It's got a positive trend, but I prefer to have a full stack of positive on the math side of it,
Yeah,
but it's meeting some of the trending elements as well. So it could be a thing. But your top end base calculation is 144 at today. It's based on what I
that's right where the sellers are. Yeah.
yeah.
I
So
see I see a negative moving nine. I see a 20 moving over, and I see oscillators all negative right now. That doesn't give me confidence to say, yeah, I want to get it. I want to see those turn more positive for me
yeah.
personally.
Yeah,
Um,
they report on Tuesday next week.
yeah, yeah, I might
So
want to wait till see what they say.
yeah.
Here is AAOI, Applied Optoelectronics. The first thing I see is a huge trend. Okay, and you just go up to where the top is, and you can see what the trend is right there. And the trend is not your friend here unless you're shorting it at this point. And so until it turns around, I mean, we are heading in a downward trend. We're below the 50, below the 200, or below the 20, below the 9, coming down to this 200, and the oscillators are negative here for me also. Anything, Trent?
Yeah, same thing. It's a falling knife.
Yeah, I think you could possibly, and let's see if this will let me move. Let me just draw another line here so you guys can see. Let's put it right here. I think you can see there would be some resistance right at that level if it came down, and that's right at the 200. So that concurs. You can
Yeah.
just come down and see where it's been hit before, and then we bounced off of it. If it continues down, that would be where you might want to see a bounce, but we got a ways to go on that right now.
I think
Like
if it could reclaim $163, you could see a turn, but you're far from it.
we're far from it. Yeah, definitely. Yeah, I would call that a stretch at this
Yeah,
point.
right. Exactly. I mean, something miraculous would have to happen.
Yeah. Galaxy, you guys are busy today. Again, I look at Galaxy. It's hitting right on resistance now. Okay, it's up a little bit. Uh, but again, you look at your trends, and you see where your trend is. And in this case, it's really not your friend. Okay, it's still in that position. You're under the 9, you're under the 200, you're under the 50. Your oscillators are all negative right now. Um, but you do have this nice level here at 24.54 of support. You can see we came down to hit it. We'll see if that 9 can come down, roll back up, but then you got another level of resistance right above it at 25.51. So you're still heading down trend wise. We need that 9 to get above that short term moving average. And we need the oscillators to turn around on us a little bit. You just got to be patient. What do you got, Trent?
Um, Basically, you're at the bottom of the trading range. Today's trading range, 28 is the top end. Um, Really, just it does. There's no confirmation of that. The trend is confirmed. And in this case, if the trend was confirmed, it would mean it's going to continue to go down. So that's sort of
Yeah,
helpful. I think it's just an indecisive point of view. And watch your trend. Your trending lines. I use the 200, the 62, and the 15. Mark uses 250 and 20 and 9. So use your process to confirm, but right now it just looks like it's just going to continue to fall.
yeah,
And it's in that category of questionable because it's that subcategory of rent a data center.
that's true.
And yeah,
And what else we got? We got CLSK, Clean Spark again. Uh, Downward trend, double top, always not good. Double top brought us into a downward trend. You can see the topping tails here and here. look for those and see it flattened out. And now we're fighting the 200. Okay, we've fought it before, we got above it, but I would have to wait. And right here is another level of pretty hard resistance right above the 200. This this 9 is screaming down, so is the 20. All the oscillators are down and negative. But again, we're trying to fight this 200. It's hard level to get above, and once you do, we might have an opportunity. And then you got some sells at about 1423. Trent, what you got on this one? Anything?
I think this is similar to a lot of the other ones we've looked at. The ones that I think are opportunities, especially when you have a falling trend like this, you know, every one of them we've pulled up here recently is just the same thing. It's just mathematically it's not being supported. There's questions about the trending. Go back to ONDS and you find a level of bottoming. And I think those are the ones you want to see chart wise. You see this behavior here. It's come down, it's hit a level, it's bouncing, bouncing, bouncing off this level, which creates support and accumulation over time. Some event or something will push this higher, whereas the other ones like Galaxy and some of these others, CLSK is just it's continuously trending down. It's still trying to find a bottom, and that's where you want to wait for the bottom, because then you get support, and if there's support there, a foundation is being built. Then it's just a matter of time and probably a news event that pushes this higher, especially in the short-term period.
And have a plan that tells you, you don't know if this is the bottom unless you have some type of plan that tells you have some confirmation that we're moving up. My confirmation is looking at the oscillators, getting above that 9, getting the RSI back up. So you see upward momentum, and I don't see it yet. I just see consolidation, but I do see positivity potential here. So it'd definitely be on my list of things to watch.
Yeah. And I think if you apply that kind of thinking to all the charts that you're looking at, I mean, that Mark looks at it from a technical standpoint. You look at it from my point of view, mathematically, is it being confirmed by the institutions and Kerry's fundamental basis? You combine that as a part of all three of those as your part of your process, you're going to find some good ideas here, I think.
XE Energy, and this is new, obviously, because we just got the 50-day, but I'm just looking at your trend is not your friend here. We are at some level of support, but again, we haven't been around long enough to really understand this. This is a new stock. Again, new stocks are more speculative. I don't know anything about it. I don't know if they make any money. I don't know what they do. I don't see any earnings reports yet. But definitely the trend is down. So
yeah, I think it's less than 52 days old. So
yeah,
and
there's your 50 right there.
Right. The company operates as an energy company the firm focuses on modular nuclear reactors, fuel technology for clean energy. When you throw no offense to anybody, but when you throw nuclear into this, I just go, okay, well, that's a headline. Because until our government really just turns around on nuclear power plants being built, it's sort of like data centers, probably even more resistance than data centers. It's a trade. So look for bounces, in my opinion, on stuff related to nuclear. Until our government comes out and says, we're going to build 12 new nuclear plants and we're going to put them at each corner of the United States and then in the middle. And everybody gets behind it. It's the same fight, different day.
It's possible though, because I saw a survey that more people are in favor of nuclear plants than they are of data centers.
Now, you're right.
Yeah.
Well, that's a difference. That's a change.
Yeah, no kidding. Yeah.
Right. Remember when what 3 Mile Island melted down and then Chernobyl is like, no way in hell we're building one of those in our country.
Yeah. Now I think Microsoft's trying to power it back up. We have had Zeke waiting there for a long time, very patiently. Are you still with us, Zeke?
Yeah, of course.
There he is.
I have lots of patience.
You do, obviously.
Yeah, I have lots of time too. Anyway, generally when I ask a question, it's because I think I know the answer. The key word to that statement is think. That's why I asked the question. So, go back 2 or 3 days. I asked how come Iran was headed up, and Troy gave a good explanation, which seemed to be exactly why. My question on that one, and I have a couple other ones after that,
Hmm.
is Trent. Well, I'll make an assumption instead of a question. I'm going to assume that you knew the answer to that because of your experience, your years in the in doing this. There's not a place where I can go or you can go and get some kind of indication as to the what the institutions are doing in this case.
I think, well, that's where the 1880 font analyzer comes in. It is looking at the historical math behind how institutions behave. Prior to high-speed frequency trading and the internet, I mean, it was more fundamentally driven world. We got the internet, we got high frequency trading. Now we got these AI models that, 12-year-old kids are building. Um, and so I look at it from the historical mathematical side of it. And when I don't see confirmation that this is going to be a positive, a confirmation of the trend movement, then it becomes, that's coming from what institutions build their models on. So in a way, yes, but I also, I've been doing this for what, 27 years now, which is so weird to say. Um,
So is it fair to say that in place of an other explanation or explanations, that's likely what the explanation is?
yeah, I mean, it's gut. I
Okay.
mean, it's gut.
Yeah.
I look at this and I look at this whole AI trade, and because just putting time in, that 10,000 hours that Seth Godin talks about to become an expert, I think you just build up history and knowledge. And when I look at a lot of these companies, and I look at it from because of that knowledge. The only way you get it is this time spent.
We used to use that premise in law force investigations. Uh,
Yeah.
uh, you can't only stick to that, of course, because sometimes you'll get caught if you do. Okay, that explains that. The next one is I think we've pretty much decided, well, I have anyway, that the AI the way AI is going to unfold, at least in the short term, has changed from what we thought it was a while back.
Hmm.
So if you were sitting at home and you weren't even part of this group, and the reason why I'm asking the question that way is because I'm not asking for financial advice.
Hmm.
Um, and you had to now, today or yesterday or whatever, pick 3 or 4 stocks that you would give some pretty good look at in view of the fact of the change of direction. Then I have one other inquiry after that.
Well,
Um,
I think, go
Go
ahead.
ahead, Mark. No, please go ahead.
I think, I don't like to to look. I look at trends, okay, and we talked about it earlier. I look at things like Microsoft, who we just talked about, what they're doing. Uh, they're taking their money back, and you can see it, and we can look at the mags now. Today they're down a little bit, underneath, but uh, these guys have the money, and they're the spenders, and now they're starting to reel that in and say, look, let's bring it in house, do this ourselves, and make it a lot cheaper. And I think that's going to benefit them over the longer term. I think Google will probably be the same. I mean, we're seeing the same kind of situation here. Uh, I think I don't know much about Meta, but Amazon, I'm not a big Meta. So I don't know what they do. They just seem to be all over. I see the same kind of patterns kind of in Amazon and what Amazon's trying to do. And I think Trent hit it yesterday, and we talked about this. Apple. I think Apple hasn't done all the spend. Now here we are in a double top on Apple. Okay, potentially, and meaning that we'll probably see it head back down. But when you think of Apple, how many people have the phones? And that's a delivery system. And Apple says, look, I don't care what platform you want, OpenAI, you want Anthropic, you want Gemini, you want anything, you can use it on our phone, and we'll take a piece of that. And that's probably going to be pretty brilliant too. So I think it's these are the guys with the money. These guys are the ones that are driving this. They got a little out of control in their spend, in my opinion. Okay, they went out, and everyone was racing to a finish line that they didn't know where it was, and now they're like, "Hey, where's that finish line?" Well, the finish line is where we say it is, and we're seeing that these guys start to take their the control of their future back. What do you think, Trent?
I would agree. Definitely Microsoft, Google, Apple, they have deep pockets. They have diversified income sources. Long term, I think they'll be winners, like they have been through all these cycles. On a more of a shorter term, next 12 months, I think the influence of the Fed on the bond market, the treasury market, could be an opportunity when I look at TLT or IEF, which represents the bond values movements of the bond market. Um, Yields are high, which affects lending costs, which affects the housing market, which affects the first-time home buyer, the second-time home buyer. Those costs have to be reduced, and a lot of it's tied to U.S. Treasury bonds. It's the short-term bond or the long-term bond, whichever. So I think you'll see some intervention at some point in the near future by the Fed, and that will drive the TLTs and IEFs higher. And that could be a nice opportunity to make some money. So that's going back to the longer term point of view in this whole AI game. I just go back to the guys who has deep pockets, diversified income, Microsoft, Apple, Google, Amazon. They all, I just order. How many times do you order stuff on Amazon a week? It's ridiculous. So they have diversified revenue, whereas the ones that are hyper focused on one element of it that is very fragile, those are the ones I'm betting against. So I guess, yeah, those are my 3 or 4 kind of approach to this.
Strangely enough, those are the same group, 3 or 4 or 5 that are on my list. So I guess we're on the same page.
Yeah,
Hey, great thinkers think alike,
that's
right?
right.
I
Yeah.
wouldn't include myself in the great thinkers.
Well, we're
That's why I
including you,
chose to
see.
use the words on the same page.
Well, we include you on all of you guys on that great thinker
You
list
all
because
a
we
great
include.
mind, guys. I wouldn't have it any other way. I only like to speak with great minds. That's why
There
I'm
you
here.
go.
We're going to change
Oh,
it from the morning edge to the morning great minds.
there you
Okay,
go.
so
I like
now
it.
that list made me want to ask another question. After this question, is a little off of
Oh,
the.
I'm sorry, your AI tokens have run out. You'll have to wait 5 hours before you can ask the next question.
Okay, but my dues are paid up though.
Oh,
Oh,
okay.
oh,
All right.
Yeah.
yeah. Sorry,
Uh,
we're having energy difficulty.
Yeah, exactly.
let,
Yeah.
let me ask the next
Sure.
the question, and then you can think about the answer while you're answering this other question. So that's the list of 4. If you had already owned NBIS, WLF, CoreWeave, and Iran, those 4, would you be thinking about slowly getting out of those? Okay, before you answer that question, what's the significance of a stock exchange in Dallas, Texas?
Government
What's the
backing.
I
significance?
mean, why do we need it, or what's
They're
what's
moving
your
out.
thoughts?
I
They're
think
moving out of New York.
yeah, they're moving out of New York because New York is an unfriendly situation. So you're seeing financial go down to Miami sometime and see looks like New York used to be. And all the
Yeah.
financial stuff and Texas, Schwab's down in
It's.
Texas,
I think a big part of it is when you have the mayor of the city you're in is
Mhm.
targeting you and publicly targeting you and bashing you. Um, then you get deterred and you move somewhere else. Whereas Texas, Florida are two states that are like, bring it. We'll support you. We'll provide you infrastructure. We'll provide you tax incentives. Bring your business. We get it. And I think that's why what JP Morgan is moving a bunch of people there, a bunch of jobs there.
Oh,
Um,
Goldman Sachs, and yeah,
Goldman's, they're all moving to friendlier environment. Whereas right now, New York City in particular is targeting those people, and you're starting to see little bits of retaliation. And the retaliation is, Ken Griffin pointed out. He said, "Yeah, we're going to build a $6 billion building, and employ bunches of people in New York City." And then the mayor went after his it's not a
well,
penthouse that he bought, and
he
went
gave a
after
bit.
him
Yeah,
and
he
said
did
he
a
said
video
fine.
outside of his penthouse. Yeah,
Yeah. He said, basically, Ken said, well, we redistribute that. We basically took that 6 billion and we moved it to Miami, and we're going to expand there. I
yeah.
mean, that is basically you're not supporting us. You're not supporting the jobs we create, the tax dollars we create, the revenue we create here. So we're going to go elsewhere. And Florida and Texas are the two biggest supporters of
And look,
the
Brad
financial
said,
industry now.
in the chat, California's doing the same with their billionaire tax.
Oh yeah. I
They'll be
mean,
moving out. Look at how many companies moved out of Silicon Valley. Tesla moved out to Austin.
yeah.
Uh,
You look at I heard I guess one of the people who won the primary in New York, and basically she said, I think we should tax people at 80% tax rates. And I'm like, 80% of your income, that everybody, just think about it, everybody on this channel, 80% of your income goes to them. Is that fair? Is that right? Does that incentivize you to stick around? No.
well, it's because they know how to spend it better than we do, right? Look at all the
Yeah.
efficiency we have.
Yeah.
You
I
know,
mean, if you think about Singapore, Singapore has a 15% business tax. How much business goes to Singapore because of that?
I spent a lot of time in
Ton.
Singapore. We had a factory there. Man, it was amazing, Singapore, how much business is there. You
Oh,
know,
yes.
yeah.
My brother-in-law does business in Singapore.
Now you don't want
So,
to spit your gum out on the sidewalk because you're going to get
no,
caned,
right.
but yeah.
But still, you create an environment. I mean, think about Dubai. Dubai, I think, has no tax rates. Yet that is a thriving country because they have oil is a big part of it. But think about this: if you lowered tax rates for businesses to 15% here in the United States, and you lowered income tax rates to say 25% top end, how much more business would come to this country? How much more spending would you spend in our country? I mean, it'd be incredible. And you see the countries that have done it from a business perspective, and you see them thriving from a business standpoint. I think when you go after the people who employ the people of your country, and you make them and you throw rocks at them and tell them they're bad people, that makes them go, I'll go elsewhere where my business is, embraced. And that's why you're seeing Texas and Florida as a big place where companies are moving to. I would even
I
say probably Tennessee is another example.
It's hard for me to watch our politicians berate successful people who, like Ken Griffin or Elon Musk, or I don't like
Yeah.
Zuckerberg, but Zuckerberg and people who have done very well. And yeah, you get rewarded in this country. That's the whole thing, is everyone has an opportunity to do it. I mean, Zuckerberg dropped out of college, and look what he did. And look at, just a ton of people. And I've worked for Rod Canyon, who started uh, Compact Computer. I worked for uh, Joe Ricketts, who started from nothing and built Ameritrade and sold that off. I worked for these guys. They didn't, no one gave them anything, and they went and they did it. And they employed thousands and thousands of people. And look at the technology just from Compaq and its miniaturization of computers that ended up being the driver for the iPhone, the
Mm-hmm.
miniaturized computers, And you look at
Mm-hmm.
Ameritrade, who perfected the trading system, the $8 trade, and then the free trades, and the technology behind the trading. that all exist because these guys took the chance. And we're gonna villainize those people and all the people they employ and all the benefits that they get. I don't get it.
I honestly, I think, because I've heard it over the weekend, just a younger generation has been trained to think in a life work balance. You know, if you're going to build something incredible, there is no balance. It's really skewed. I was sitting here thinking yesterday because of somebody said about I just want to be able to go to work 9 to 5. And it's a younger person who wants to get paid ridiculous amounts of money. And I'm like thinking to myself, how many hours do I work a day? Well, I figure baseline is 10, and I work 5 days a week or 7 days a week. And on weekends, I'll work 5 days, 5 hours a day, Saturday and Sunday each. So, I'm over what, 60 hours, 70 hours a week. And that's just normal to me. That's normal because I love what I
I'm with
do.
you. I'm with you on
Yeah.
that too. Yeah.
Yeah. But you have a generation, and that's where you're seeing the rise of this whole democratic socialism, which makes no sense, in
Doesn't
in
it's
New York, because it's that mentality of I just 30, give it to me 34 hours a week. I should have equally what Jeff Bezos has. Well, put in the hours, take the
God, I love
risks,
this
and go.
conversation. Thank
what's
you,
that?
Trent. Thank you, Trent. I love this conversation. And it goes right on with the immigrants that, like me, that came in this country and worked our butt off for 40 years to build business and thrive and never ask for an extra money or whatever. We just work and accumulate and hope for a better day. And that's how this country should stay. It should not become a luxury place where everybody gets everything for free. I'm
Yeah,
sorry, Dubai
it's
and
That's
all these
yeah.
places is not a place where I want to go live.
I always go back to the question: where has that ever worked in the history of the world? Where? Never.
Exactly.
Yeah.
I don't want to see myself living in Dubai with nothing to do all day. Oh my God. I'm going to be full of trouble. I'm going to be full of bad habits. I'm going to be full of nonsense.
right.
That brain,
And you know what they need in Dubai,
functional
though?
person, hopeful.
You know what they need in Dubai, Angelo? A good Italian restaurant. I bet you'd do well there.
No, they have plenty and they pay a lot of money for it.
I think though humans are pattern driven, and you will see in extremes on all ends. We've seen it historically. We're now entering an extreme side of it, and eventually we come back to the mean. It's like stocks, it's like human behavior. We all eventually come back to the mean. We just get out of whack, and I think we're just in a phase of getting out of whack. And at some point, something will trigger us to realize, oh, wow, that's unrealistic. Now we need to go back to work and need to readjust our thinking. And that's my positive spin on the human condition. I just eventually, when you go to one extreme, we always come back to the middle. And
Hopefully, yeah. But
I
I think,
mean,
yeah, this is as extreme as I've seen it. Probably um, since we used to have to do drills, nuclear drills under our desk, like we had to get under our desk, like
yeah,
that was going to save us from a nuclear bomb. I'm like,
right.
okay, but that's what they
Yeah,
told me to do.
yeah,
Getting back to Zeke's question, Zeke, I don't know when to get out of NBIS. I don't know when people got into it. I don't know why they got into it or what their thesis is or what their plans are. How you get in or out of a stock is really up to you and personal. I just look at charts and say, this looks like we're going to have support and this looks like we're going to have resistance. Uh, I have long-term positions in Berkshire Hathaway or not, yeah, in Berkshire Hathaway. Okay, so I don't really care on that, because that's a long-term investment. And trading wise, I look at charts. So I'm not in Nibius. I'm not in any of this AI trade right now because I just put out 16 reports that convince me that I'm just going to wait and see who's going to be in it. And I do think that it's going to be the hyperscalers going to come back and take control.
yeah. This is Nibius here today. 220 is where the option market has created support, opened up this morning at Um, what is it? Oh, 229. It's presently trading at 221.
Yeah,
If
look
you
at that
think about,
candle. It opened at the
yeah,
top and now we're down. I mean, we've been in
yeah,
32 minutes of trading in it. So the hype came up. Look at all the red candles where it opened higher and down. Just yesterday was when we had one that
yeah.
came up to the 50. So yeah,
I mean, and it's there's a possibility if I just use the 15 as my resistance level. If this is resistance, and like I say, let's get it there, it's gonna hit resistance and then come back down, test for support there, here at this level. What is that? 200, and then maybe it'll jump back up and try again and hit resistance here right at 220, and then eventually it just gets tired and the distribution's already happened and you start to break through 200, 270, maybe a bounce back up to 200, and then it just staircases downward over time is a real good possibility. So when you get in this zone where this trend here that we've seen, from here to here gets broken, and then it starts then it starts trying to find footing again. It's like, oh, it's like you're out in the middle of the Atlantic. You've been, it's been smooth sailing, and then all of a sudden you get knocked off the boat. Now you're just trying to stay above water. And I think that's what you're going to start to see, this process of scaling down over time and
So
moving
what we're
south.
saying is, even if you go through the charts on all four of those ones that I mentioned,
Yeah.
given
which
that
we did.
Yeah.
money, yes, money is a problem and resistance is a problem. And in the short term, the likelihood of getting much out of these four stocks is not high.
Yeah, I don't see
Doesn't
you
matter why
getting
you
new
bought them in the
new
first place.
highs. Yeah. I think you're in a process of institutions deleveraging out of a position. They
Exactly.
made a big move down towards 200 on Nibius. Now they're just capitalizing on the short-term hype trade of it, make some money as it goes back up, sell short against it, drive it back down, buy up, down, and you're going up like three steps down, one step up, three steps down, one step up, and eventually you get back down to 135 on Nibius and come down to
Yeah,
that
that's a
200.
long way down. That's a long way down. There's a lot of support levels to hit that.
Yeah,
I mean, it's not going to go straight down, but again, the trend is still down from what
yeah,
I've seen, what's going on, and what the hyperscalers are doing, and how they're now moving money around. And okay, yeah, we'll still use you, we'll still pay you, but we're gonna we're gonna start competing with you. Probably not a good thing. And I think you see the institutions seeing the same thing that we've been seeing for weeks now. Uh, and but CNBC is not telling you that. They're out there. Oh yeah, you watch the afternoon or the midday report, and you got their panel there, and I don't see anybody ever say anything negative about anything, you know, or
I think you're
even
starting to see hints of it.
well, hints of it, but for sure they have to when the charts start changing and go, they change.
Yeah,
They're like, oh yeah, I saw this coming. I saw this, and I've been out of that. I trimmed. I trimmed,
yeah,
but the day before they were buying. Okay, they
yeah.
say,
I
and that's why I put that series. Things you don't learn you don't hear on CNBC because they don't tell you this because their job is to
yeah.
build their book.
But I think it's important, Zeke, to understand the behavior of how institutions trade markets. And right now, you're in a process of staircasing downward. And when they move up, you got to step back and go, okay, why did it move up? Was it a news headline? Was it a exhaustion trade all the way down to what, 200 on Nibius or so? Was it exhaustion trade down to what is it? The support level was at 81 or so on CoreWeave, which now is 75, which tells me market makers are pricing lower lows versus higher lows and higher highs. So that should be, from a technical standpoint, something you're visualizing here is
Well,
how is that institution trading this stock right now?
that's exactly what I was going to bring up. You see higher lows here, higher highs,
Yeah,
and now we're seeing lower highs and lower lows.
yeah,
Okay, and that's just a trend reversal. And I don't know if we're gonna, that's a long ways down here, 135, and there's a lot of
Mhm.
support levels to get to that point. But that doesn't mean we can't get there. But again, look at where we're at today. It opened way up, and now we're on the 50. It wouldn't surprise me to close on the 50 or a little bit below the 50 today. Again, we're still in the Cowboys section of the trading day, the first 45 minutes, and we'll see where it evens out.
Yeah, I think, but you have to step back from this chart and go, okay, what would cause Nibius to move higher, to move, hit all, to have higher highs, higher lows? What would change that? And that comes down to fundamentals. That comes down to the fundamental makeup of this subsector of technology. And that's where you apply that element to your process. And right now, what this tells me is this: you're going to see lower lows and lower highs until the economics of AI change. And I don't, and I, the economics, in my opinion, are changing towards the big hyperscalers. And they're building it themselves now.
I
They
think
have a
you just
lot.
got to go look at the reports we put out, the last 16, and
Yeah.
put them all together and connect the dots and make up your own mind. You don't have
Yeah.
to listen to me, but those are all fact and backed by sources. And I think if you're going to be in this game, you need to know the game and understand it, be able to explain it, both
Yeah.
sides, high
I
and
think
low.
I think it's also applying this, what you're learning here, apply it to everything when it comes to markets. Because eventually, consumer staples will be the rage. Maybe they'll make a better Tata chip. I don't know. But this is a cycle. And once you understand the behavior of cycles, you can apply it to anything. So anyhow, all right, Mark, I think we have exhausted the Zoom hour. You're on mute. You're on mute.
Mute me. Remember home builders. Up, 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 boom, down. All right, now we're bouncing off the 200. So money moves to where the value is. And who would have thought home builders? And that was up until the end of June. It started uh, the end of May. So for a
Yeah.
month, home builders were up. Of all things, you know.
Yeah.
Anyway,
Yeah. All right. We'll wrap it up there. Thank you all again. Thanks for support, and thank you for your great questions. Zeke, thank you very much. That's very, I think, very educational and helpful to have those kind of conversations. And
definitely,
we will be back here tomorrow. Is it really Thursday?
it's Thursday.
Okay, so tomorrow's big day. We got the morning edge in the morning, then we got Kerry's call at 3 Central, 4 Eastern. Hope you can join us. We're putting out more content, research. Definitely check that out. I do need to upload a lot of research to the research page on the website, so I'll be trying to do that today as well. There is that referral code that I put in the newsletter about referring what we're doing to a friend and getting a free view of it, of what we do. We appreciate if you'd share that with friends and help us grow our community here and increase this conversation. I love it that it's gone for an hour and 45 minutes. I'm getting dirty looks from the people around me, but that's all right. All right, we'll wrap it up there. Thank you all again. Have a great day, and we'll see you all tomorrow. Live loud.
Live loud.
Here,
Peace.
Manny.
Peace.
See you later, Mark.
Yep.